This is transaction number 8, chapter 2, 2.1. It's going to fall under the paid cash for expense category. So this is an expense. So it could read, on August 12th, we paid cash for rent of $250. Again, like any other transaction, we need to go to our accounting equation and figure out what two accounts are being affected. Well, we know right off the bat that cash falls under our assets. Now, in this case here, we're paying cash out. We're not gaining cash, we're paying cash out. So like previous transactions, we're not gaining it, we're losing it. We're subtracting $250 from our cash. Now, rent. If you read the textbook, you might know by now, but if you're not, rent is not an asset. Rent is not a liability. Rent actually will fall under our owner's equity or owner's capital. So again, we need to make sure that our accounting equation balances. We've decreased our assets, which means we now need to decrease our liabilities and owner's equity side, because the two accounts that are affected are on opposite sides of the equation. So we need to decrease our rent $250, right? Now, we'll get into why that is in chapter 3, but for now, this is all you need to know. So when we look down at the example from your textbook, again, you can see our transaction. We have our assets, our liabilities, our owner's equity. We have our cash now that we've decreased $250. And we have our capital, our owner's equity. We are now decreasing another $250. And it's an expense, all right? Previous transaction was a revenue. We were increasing capital. Now we're decreasing our capital, and that is an expense. So we're decreasing. And again, you'll notice that if we're to add these up, our assets will equal our liabilities and owner's equity. That is paid cash for an expense. Transaction number